So now quickly describe this split dollar arrangement between me and the corp. How does this work?
Yeah, so split dollar essentially it really just relies on that return of premium option, which is what I was saying, that if nothing happens to you after 15 years, you can get the money back to you personally. So how this kind of really works is we buy the CI policy through your corporation, but the return of premium amount. So let's say on your policy, the return of premium option is, let's say, $1,000 for the year. Great. So that $1,000 part of your CI policy, we'll pay for that $1,000 personally as a part of your personal income tax, and the remainder of your policy coverage, whatever that is, let's say maybe that's $5,000 for the year. So that $5,000 for the CI policy as a core policy will be paid through your corporation, but the $1,000 for the return of premium option will be paid through your personal income. The reason we would do it this way is now all of a sudden you're not paying that entire massive $6,000 coverage through your personal hands. You're only paying for that $1,000. But now what this does is that at any time in the future, if you never actually end up using the policy, anytime after 15 years, you can get all the money that you paid through for the policy. So let's say $6,000 a year. Easy math, let's just say you paid into it for 10 years. There's no policy you can pay for 10 years. It's minimum 15. But just for easy math, $6,000, 10 years, 60 grand. Even you only paid $1,000 for, every year to your personal income, you'd actually get that entire $60,000 back into your personal hands tax free if you decide that you want to surrender the policy after 15 years. So it all of a sudden, not only are we covering you for major illnesses, it's actually a major tax planning tool now to actually get money out of your corporation in the future without paying a dollar of tax. And the rate of return, we actually calculate the rate of return on that. The rate of return is actually pretty solid. So if you take into account how much money would be before taxes and after taxes, it's compared to tax free. When we run that analysis, usually you're hovering around like 8 to 9% or so guaranteed. If you found this clip valuable and you'd like to listen to the whole episode, then please go to Spotify or Apple or Google or wherever you like to listen to your podcasts and search for Your Rich Fulfilling Life Show for the whole episode.